afternoon, everyone. My name is Chris Cooper, known as the Channel Guy Trader, and I am reporting to you live from Wall Street Trading Satellite Office down in sunny South Florida. Today's date is Saturday, October the 20th, 2012, and here is this week's weekend review. I want to first start off by taking a look to see how the indices closed on Friday. Obviously, if you were not watching the markets, Friday was a very important day because we had some nice selling pressure on the markets. I mean, just looking at the breadth, we had 5,001 issues declining, and we had 1,186 issues advancing on the NYSE, NASDAQ, and AMEX. So bears were definitely in control, just about a 5-1 there. And if you take a look to see how the indices closed on Friday, the Dow Jones was down 205.43 points, the NASDAQ was down 67.25 points, and the S&P 500 was down 24.15. So there was a lot of damage done. I got a great video here put together for you guys. If you guys have not subscribed to the YouTube channel, please go ahead and do so. If you guys are not following us on Twitter, Facebook, all that stuff could be found on our website at wallstreettrading.com. So let's go ahead and jump into the weekend analysis here, and let's talk about let's go ahead and see how the indices closed the week out here. The NASDAQ closed down 1.91%. The Russell 2000 closed down 0.88%. Dow Jones closed down 0.6%. S&P 500 closed down 0.48%. Crude oil was down 1.24%. GLD was down. Gold was down 0.82%. Banks were down slightly, down 0.12% on the banking index. The oil index was a little shining star here this week, up 1.43%. The transports were up 0.33%. And look at this, guys, the volatility index, what we have been telling you guys to watch in each of our videos here. We go over that we have been showing you guys going over the volatility index. You can see here that we were expecting that big pop, and we got that big pop on Friday. All right, volatility index was up 11.72%. Okay. And, we call that trade out in our chat room, which you could go to mywallstreettv.com. Type in the password SMART. You'll have access to our chat room. Free, nice little 14-day free trial. Go to the website, wallstreettrading.com, and fill out that upper right-hand form. So in any case, just before we go over the rest of the analysis here, because this is going to be an extended video, obviously this is our weekend review. On Friday, we did call the volatility index to the long side. We got our traders involved in the VXX, which is long volatility, and that thing shot up pretty nice. Actually had a nice trade in the 32 half calls, weekly calls. Bottom at 86 cents, and they went to a high of $2 there. So some good stuff, guys. Make sure you come check out what we have here. It's some good accurate information that is pretty accurate than some of the stuff you guys have out there. Now let's take a look at something I want to show you guys. On Twitter the other day, I posted out the fact that we want to be careful getting long in this area because this could be a bull trap at the top of the channel. If you guys have been watching my videos and my analysis, you guys have been checking out my website, channelguytrader.com, along with wallstreettradings.com, where most of the videos go up on there. You guys would have seen me post some of this interesting analysis here. And this was what I posted on October the 17th on my Twitter. It said, bull trap in play. If we wick out again up there, trade the pattern to the top of the range. Let's see how she does. All right, and then on, let's see, so that was on Wednesday. And then on Wednesday here on my Twitter again, I said, careful getting into giddy up here. Careful getting to giddy up here. We are in the range at a downward angle, like I've been explaining in the after the bell market summary videos. Target reached. Now we want to wait and see if we today closes below 1452. Then we have some trap action in play. So this whole area, all right. You can see every time you get up to here, this area, they sell the market, they sell the market, they sell the market. We got up in this area again. They try to make it look nice, and then they sold the market. There was no confirmation. So we'll take a look at that daily chart here shortly. So if you guys want to follow me on Facebook, you could go ahead. My name's Chris Cooper right on there, or obviously you can follow me on Facebook via the channel page I have for Channel Guy Trader. So let's go and take a look at the market now that we're through all that stuff. And here we go. We're going to start off with the ES daily chart because this is the most significant one that I've been showing you guys with some of my analysis here. And you can see here on Thursday we had that nice little close. Obviously that chart that I showed you guys from the Facebook was when the day was not at the close. That was when the candlestick was down, and they had that last minute push back up, which I explained in the intraday video that day. And that's what basically what made his close looking all nice here. Get a little bit of people giddy. No confirmation on Thursday, and like I highlighted it in the tweet or my Facebook, Anything below 1452 sets this up for a trap opportunity. And what do you have, ladies and gentlemen? A nice trap opportunity that we nailed. So make sure you go check out that analysis, accurate analysis that we give out over here. So let's take a look at the weekly chart. Starting off, actually, let's take a look at the monthly chart. Monthly chart, you were still not able to break above the January 2008 bear market highs. You can see we've been having troubles at those levels since last month and this month. Take a look, drill in on the weekly time frame, and it's still a little bit too early to get kind of shaken up. I mean, we just had one big down day. Yeah, probably could have been a little bit overreacted, a little overreaction there. But I mean, until we get below 1407, all right, until we get below 1407 on the ES, we're still kind of hanging in there because we're above the weekly support, which is weekly resistance, which is now support that we had back here earlier in the year, and now we're above it. So that 1407 and a half area is going to be a key area that I will be watching this week. All right, then we take a look at the daily chart, and you can see here we had this whole pattern that we were watching here from the move up here, from us highlighting this little high base flag, kind of similar to this one, but this one failed. Notice the trap action. We broke back down. All right, which that was support, so now it's resistance. You can see how earlier that next week we tried to break above that level, it held. Tried to break above the level, it held. Now we're back above it. So then all this action, all right, this is just me giving you guys the whole setup that we've been tracking here for the past couple weeks. Then this is all this action right here was some shorts getting trapped. They got squeezed out the market. All right, we had that earnings, we had the jobs number 2 weeks ago. That number came out, good. Supposedly the numbers were fluffed, whatever the case was. They were false numbers. The market traded a high that day, gave it all back. Nice reversal day. That caused for heavy selling last week. Came down to our 1420 support area that we told you guys to get long since it has been the range that we've been watching. Bounced right off that area, back up towards the top. Remember, this is still a channel. And what did they do? Sell the top. No confirmation. And now we're back down. Now, it's not actually 1420 now. The level we have to be watching now, as far as this channel goes, is going to be around 1417. That 1420 will be important, but 1417. And then Monday's lows, which were 1416.50. We'll be watching this week's lows very closely. And we have some key levels to watch below 1416 that we'll be giving you guys going forward once we get down below Monday's low around 1416.5. We'll have some targets. I mean, we are looking for possibly a test down towards that 1400 level. So that's the ES. One thing I also want to show you guys is a chart. I show you guys the profit chart where I show the S&P with the 3-month candles, which represent kind of like a quarter, and we had that breakout from the prior 2 quarters here. All right, and if we start trading back below on the SPX, the same level there, that 1409, 1408 area, this could be a nice little bull trap that's taking place on this nice little quarterly chart here. And I like this quarterly chart because, of course, these candlesticks are 3 months, okay? So if people are forecasting good earnings on the S&P 500 companies, then this kind of will give us a pattern of a breakout, right? Because people buy companies because they expect they're going to make money in the future, and the stocks is going to trade higher. So this would be signifying that we could have a breakout. So we broke out last quarter, but now this quarter all these companies are reporting bad. So people probably say, hey, this is not going to look good. A lot of people, a lot of these companies are coming out with bad numbers, even though these companies are coming out with bad numbers, the market keeps on buying them up. But I think that's all going to change. But anyway, back to what I was saying here. If we get back below this 1409 level, this could be a little bull trap. We'll have to wait and see, as that was a key level that was holding as resistance for these 2 quarters right here. Just a little extra stuff I wanted to show you there. So anyway, let's take a look at the Qs, triple Qs. All right, start off with the monthly chart. See how that's looking. Monthly chart, upward channel. Remember, we showed the Fibonacci's from the tech bubble sell-off back in 2000, 2001. And we retraced 50% of that move. And you see we got rejected there last week. Last month, I should say here. And right now, we are selling off of that candlestick, off of that back test of the 50% retracement to the highs there. Take a look at the weekly chart. Weekly, the NASDAQ is back below the highs that we made back here in April. So believe it or not, this could be some bull trap action. Well, it's already bull trap action that's taken place here because we already had 2 consecutive weeks down. However, one thing I want you guys to realize is that we have a key trend line that could act as support if we do get all the way down there towards the 63, 62 area on the NASDAQ. So we could be in for a couple weeks of selling if they want to keep on selling these tech stocks. We'll have to wait and see. Based on how the volatility index is setting up, we could be setting up for some tough times in the market here. But we do have elections coming out, so some people are saying that they may try to hold the market up for elections. We'll wait and see. But this is a key trend line on the weekly time frame because it has this inflection point right here. This inflection point, you can see when we broke above that key trend line, we have some consecutive closes. All right, we started taking off there. So same thing here that we call out intraday. When you have a break of a trend line, look for it to see if we could hold that little low, the break. If it kind of puts in like a little higher low. If not, we break back below that low, then we usually come down for an official back test of that trend line, which on the NASDAQ weekly chart on the Qs, that would be around 62. But we do have these moving averages as well on the 50-day simple moving average and exponential at 63 on the weekly time frame. Let's take a look at the daily. The daily's right at this key trend line. Also lines up. Let me put the moving averages back on the chart. All right. It also lines up with this little prior band of this little resistance we had. All right. It was support over here. We broke through, so now it acted as resistance. Acted as resistance this whole time. Then we broke above it back here in August. So therefore, this area is going to be very important. 65 is basically going to be the area to watch, which also lines up with the 200-day. What's this right? The 200-day simple moving average on the Qs. All right, is right here around 64.96. The 200-day exponential is around 64.58. Okay, so that's how the Qs are looking. Now let's take a look at the small caps, IWM. All right, and the key tail on Friday, again, I tweeted this stuff out. Make sure you guys are following us on Twitter. All right, was that the fact that the market was trading weak. We had a nice little bear flag on the 15-minute chart. We should have sold off. All right, we should have sold off, and we didn't. And I'm gonna go ahead and bring some of the intraday action for you guys. I know this is me again, always jumping around like I like to do. But you know, this was that key trend line that we were watching from before, right? Remember, this red trend line we had was still relevant from the from that little channel that we were trading in. All right, you guys go through some of the videos for that. But this is a 15-minute chart on the ES. This was a key channel. This little red one that we had up here. You guys see that? That nice little red channel that we broke out of. We broke down out of them. We broke back inside of it. Now we're back below it. So remember, always keep key trend lines on your chart. In any case here, you know, we had a nice little head and shoulders pattern that set up off that key trend line with the fake bull trap right here on Thursday, and then obviously filling on Friday. But I mean, when the market was selling off early in the morning on Friday here, like before the open, not before the open, I'm sorry, but at the open, all right, we had this little nice bear flag pattern that was playing out here, right? And it kept on going slow. Every time the market was going down, they kept on buying it up, till finally it cracked at 11 o'clock. But during this whole time, the only thing that was holding the market up right here before it cracked, because it should have actually started cracking right on this little candle, right, like on these two candles right here around 10:30. But what was holding the market up was their financials, which I highlighted. I said, guys, do not buy this right now. The financials are the only thing holding the market up, and the small caps. Take a look at the 15-minute chart of the IWM. The small caps were holding. So once the financials really started getting weak and the small caps started getting weak, that's when I was like, okay, guys, it's time to short now. Game's on. And that's when exactly when I guess they cut the sell programs on those stocks there on that sector, on the financials and on the small caps, and everything was a go from there at 11 o'clock. Heavy selling came in. The volatility index calls and VXX trade that we called started moving much higher. So anyways, let's take a look at the IWM, starting off with the monthly chart. You can see the monthly chart is at the top of this little range. This little 685 area acted as resistance, as you can see back here in 2007, acted as resistance back here in 2011 last year, and now it's currently acting as resistance. This 85 level on the IWM. Until we get above that level and hold, you want to be very cautious buying that up here. That's the monthly chart. Let's take a look at the weekly chart. Weekly chart, you can see a fake breakout, right? Potentially a bull trap in play. We do have some moving averages right underneath it. However, you can see this was a key level. We broke above it, and now we're back below it. Take a look at the daily chart of the IWM, right? We had that nice little downward channel, had the break Had the failed breakout on that jobs number Friday, pulled back in, got right back above that key trend line, highlighted the fact that if we could hold above 83, we'll be in good shape. However, that did not happen. We got right below that level, and now we're back inside this little downward channel. If IWM gets below 81, if it gets below 81 and holds, we could be in for some ugly action for a move back down here towards 79.50 and try to stay back, try to keep this little channel here as the little roadmap, which has been acting pretty well so far with the above and below method, using around those key levels. So that's the IWM. What else do I want to make sure? Let me bring up my agenda here, which I do for you guys to make sure everything's in order. That doesn't really work because I usually skip around them everywhere. All right, next thing we want to take a look at, wanted to look at the Dow Jones. I've been looking at the Dow Jones a little bit more, but via the Dow Jones futures, the mini Dow Jones. You can see we're right on this key trend line, this 13,250. If we break below that and hold, I would say the Dow Jones is going to come back down towards 13,000. So if the market continues to act weak, expect the Dow Jones to come down another 250 points, and let's start looking for some of those weak companies that look like they want to go down, which I'm pretty sure we'll find out pretty soon because Caterpillar has earnings on Monday, and Caterpillar does have a nice weight in the Dow Jones, if I'm not mistaken. All right, so that's the daily chart, the weekly chart. You can see here we're still above this prior resistance, which is now acting as support on the Dow. So as long as we hold above 173, we should be in good shape. So we have to wait and see. But if we don't, expect that 13,000 level. And that's a weekly chart, monthly chart. You can see this 13,380 areas acting as resistance on that monthly. And that, of course, obviously is a 2008 January highs. Okay, let's take a look at the dollar. Dollar futures are trading in a range right now. All right, it's going to get, we're expecting this volatility to pick up, and this is for one of the main reasons now. We've got the dollar futures in this nice little channel. We are in the middle of the channel right now. We could trade back up towards 80.20, but so far you can see that we have a nice little identified channel that we could use as a gauge now to help us manage our positions and trade a little bit, continue to trade accurate in these markets here using this and the euro and all the other clues that we use. Weekly chart. All right, you can see the weekly chart got a nice little bounce. I mean, dollar, it's still in the downtrend. Let's not forget, the dollar has all this resistance above it from the moving averages on the weekly time frame here. All this resistance in this 80-30 area. And really until we get above, I would say 80-70 or so, I would think the dollar's actually going to try to bounce up, which obviously I don't think that because we did have this nice little upward channel in play and we've broken down out of that. Maybe a little consolidation and then a move lower is what I'm expecting. Take a look at the monthly chart of the dollar. We're below this little key trend line, little fake bull trap right here from the breakout, failed bull flag pattern on the monthly chart of the dollar, and still looking kind of weak. We are still holding this big igniting candle low though, which is around 78.66. So if we go below 78.66 and we start holding below that level, then I'll be ready for the dollar to start making some New Year lows most likely. So that's what the dollar looks like, just sideways range. Let's take a look at the euro. All right, let's take a look at the euro dollar. And I want to bring up my channel analysis stuff on it here. Not the ES, the euro dollar. All right, the euro dollar, all right, did continue higher like we expected. All right, we had this nice little downward channel that was in play. We had that little breakout. All right, downward channel, had a little breakout. Now, obviously, we want to see it hold right here. Because if we don't and we start trading back below 1.30 on the euro, we could be caught in a similar situation like some stocks are getting caught into now with these little bull traps. All right, so we'll see how it plays out. If we hold in this little area above 1.3, it could just be another consolidation for a move higher out of this little consolidation channel that we had. All right, that's how the euro's looking. I'll just take a look at the euro dollar. That's how I don't really go into all the weekly and monthly right now because this is a little short-term action that we use. We don't really trade the currency, but we use it as a gauge with the dollar, again, and the rest of the clues that we have. So that's how the euro's looking. Let's take a look at crude oil. All right, crude oil on the weekly chart. Well, first of all, crude oil on the monthly chart, again, is in this nice little big triangle. We are expecting a big move in crude oil I wouldn't say pretty soon, but I would say within the next within the next like 3 months or so, we could be expecting not 3 months, sorry. Within the next, like, I would say 5 or 6 months, as long as we keep on continuing to trade in this little range, inside this little apex here, we're going to be expecting a big move in crude oil pretty soon. I would say maybe around, the first quarter of next year. Let's take a look at the weekly chart. All right, the weekly chart, crude oil still holding below 94. If crude oil could get back above 94 and hold above it, then we'll be expecting crude oil to move higher. One thing I am looking out for to make sure this isn't like a little, you can see how this 94 level is very important. One thing I'm looking out for to make sure this isn't like a little cup and handle that could be shaping up. Especially if we get back above 94, we can maybe have some juice for people that got short crude oil below this 94 level. A lot of things, guys. A lot of, there's going to be a lot of opportunities going, into the rest of this year and the first quarter of next year, especially with the elections going on. There's going to be a lot of opportunities to make money, and you want to make sure you're working with the right people, trading with the right people to make sure you're on the right side of the market. All right, whether you have so anyway, so crude oil here looks to go, lower, maybe back down towards 88. Unless we break back above 94, I'm not really bullish on crude oil. You can see the same thing here that we had set up in that we're seeing, where we have these little prior range breaks that are breaking down, and every time they come try to backtest, they're holding. All right, and I'm seeing that in a lot of stocks. I mean, take a look at, this was one of the clues as well. This was one of the signs that the market was getting weak. Take a look at Starbucks, right? All right, this has been a stock that we've been talking about is going to be a short if it holds below 49. And this was the reason why. Nice range, broke down, back test held, and now it's it's going lower. What's another stock that did that? Take a look at Amazon. Amazon range broke down, back test held, lower. Take a look at Apple. All right, these are the clues, guys. These are the clues that you gotta be looking for so you can have more confidence in your trade. Apple, the important range, key levels, sold off, rallied up, back test held, sell. All right. If this market was getting stronger, well then these would have broken back above those resistance level. But what does this mean? That means people are selling these back tests of the prior support, which is now acting as what? Ding ding, resistance. All right. So Apple below. We're not going to talk about Apple right now. Let's go ahead and finish going over the markets. See how I like to carry myself over the place here. So crude oil, 94. If it can't get back above 94, we're at the top of the range. We could get a selling pressure. We could get some selling pressure back down towards maybe 88 here. Let's take a look at gold. A lot of people are going to be looking for this gold, because they think it's going to be a buying opportunity. Not saying that it's not. We're going to have to wait and see. But right now it's in sell mode, and this is something that I know. That I learned from my prior mistakes. You never want to, try to pick a bottom in gold. It's just not what you want to do. You really want to wait for it to show you that it wants to reverse, that the bulls are trying to get back in control, and watch a price action. And, starting Monday, this is going to be a very important area to watch a price action, because if you take a look here, the gold futures are sitting right on their 50-day simple moving average and exponential moving average. If they break below and hold below the 1720 area, I would be expecting to move back down towards 1690. And if we break below 1690, expect to move back down towards 1664. Let's take a look at the weekly chart. All right, top of the range here. The range that you could say has been identified since earlier this year. All right, why is that? Because you got kind of like this little area right here. This inflection point, this inflection point, and this inflection point. So what are they doing? Selling the top of the range. One thing I'm going to be watching for to see if we do sell off some more, I want to see how we act around that 50% level of this range here, because people are probably looking for a 50% pullback. All right, nice little extended range here, little 50% pullback, and then a move higher. All right, we're going to wait and see. There's clues, guys, but all I'm saying, there's going to be opportunities this year to make, some large sums of money here if you're on the right side of the trade, as that is always the case. All right, GDX. Let me take off my little channel studies here. GDX, same thing, sitting right on the 50-day simple moving average, just basically in a range between this little 50.5 level here and this 55 level. A lot of support down here at 50.5. So if we do break below it, keep an eye on it. We could have some people starting to lose confidence in that trade and sell some of their shares. Let's take a look at the weekly chart. Weekly chart, this is a key level on the weekly chart as well. This 54 area. So if we could start holding above 54 in the GDX, that would be pretty good. But right now, we're all the way down at 51.73. Maybe going to be a back test inside these moving averages right here. Take a look at the monthly. You can even see You can even see more here. Why that? You can even see it a little bit better here. Why that's the key level. That 54 area. All right. So this is the prior range. And guess what? So far, that range is holding as resistance. Prior support, now resistance. Same kind of setup. It's going to be very interesting to see how this one plays out. A lot of opportunities. Just take a look at silver. A little quick look at silver. I really don't trade silver that much, but quick look at silver because I know some of you guys out there do trade silver. Silver did break below the 50-day simple moving average. Let's remember, silver did lead the market up as well. So what is this telling us? Is this forecasting that gold's going to follow and break as well? Maybe touch at 200. If silver does, gold would probably touch at 200. I don't know. But I do know that back here, silver is what caused these precious metals, was the first signs that precious metals were going to rally, as they did here. All right, and we were on top of that as well. You can go back to the videos, you can check that out. What else? Let's take a look now at the main event. This is like the main event. Hoorah, everybody yelling, hoorah. What is it? It's a volatility index, guys. The VXX, like we've been highlighting. As long as we hold above 15 and we stay above this range, we're going to be expecting a big move in volatility. Well, ding, ding. Correct. Ka-ching. We were correct. All right. We got that break above this key trend line. Got a nice strong candle. Look for volatility index to move higher. Now, every time you get these big expansion moves on the VIX, okay, we usually see a big pullback. Look at that one. All right. Big expansion move, they pulled it back. Big expansion move here, they pulled it back. Big expansion, well, that's what I just showed you guys. Big expansion move right, they pulled it back. So, ever since we've been in this little downward channel, volatility has been sold pretty hard when it has a nice little run. So now going forward, it's going to be very interesting to see, all right, if volatility is volatility going to pull back as early as Monday, Tuesday, or are we going to consolidate here while the markets consolidate, maybe try to base out and see if this volatility index gives us more clues that it wants to move higher. All right. Now, just for the fact how volatility index has been trading in the past where they sell the rallies, I wouldn't be as much interested in trying to pick up the VXX or volatility calls like right early Monday because we just had this big move. Wait, let it set up a little bit, and I'm pretty sure it was. You can see here they always sell it every time it has a big expansion move. If they don't sell this time, well, hey, then something's really up. Okay, so that's the VIX. That's the VIX. Went over that. Anything else? Copper. Can't leave this off the map. Copper, another key precious metal that we have to watch. Having trouble getting past this 375 area, $3.75. You can see how this is the key area to watch for this consolidation. Try to get back above that level right back over here early in the year. Broke back below it. Has been chopping around above that level for the ever here since September 14th, and has slowly been going back below that level, making lower highs and lower lows. Not looking good. If you guys know this pattern, you guys know that these little downward channels, whenever they do break to the downside and they don't hold that bottom range, we usually get some heavy selling. And so far, you can see that copper had a nice little down day on Friday. Let's see if it continues. If it does continue, then expect some more selling pressure in these markets and some of these little precious metals. And that's, in my opinion, that's what I'm going to be looking for. How can you play that? Well, take a look at FCX. FCX has earnings. Freeport McMoran has earnings Monday before the market opens here, 22nd. If they have bad numbers and they sell the company down, and then you have copper already looking weak to roll over, it's gonna be a good short. So we'll see how that plays. We'll see how that sets up, and we'll definitely be trading that tomorrow along with Caterpillar. So I'm not really going to go over any. I'm not really going to go over any charts here. All the chart stuff that we go over happens usually in our Sunday night video. Where we look at the different places, the different trades that we have setting up for us via the stock. So make sure you come to the chat room, My Wall Street TV. Password to log in is smart. Come check out the stocks that we'll be watching. At the same time, you can see some of the analysis and everything that we have prepared. mean, I will take a look at a couple stocks. So I don't want to end the video like that. I mean, take a look at some of these big key cap tech stocks. I mean, Google got hit on, I believe, on Thursday. Yeah, Google came out on Thursday and released their earnings early. Mistake or no mistake, they had bad numbers. Stocks been getting hit. All right, I think they had a double digit decline again in their clicks for revenue. This is the second quarter in a row. I believe that's what it said from the report that I read. So, I mean, Apple, look at Apple. Apple looks like it wants to go to the 200-day moving average. Again, as long as we hold it below this now below the 617, call it 618 level, and we consolidate below here a bit, you would have to expect that Apple's going to move low. If we get back and recover 620, then that means they're trying to save the stock here. If we hold above 620, then maybe we get a trade back up towards 640. Too early to say. All right, Amazon. All right, I'm doing this video kind of late night, so it is pretty late in the night here that I'm trying to do this video for you guys to get this out the way. Now, Amazon is going to have some nice support around the 638 area. Why? Because it comes from this consolidation. So if we were to get like a little snapback rally and Amazon was above 238, that would be a stock that I'll be interested in picking up some calls in and trading it for like a little quick scalp to the top side. But again, stock is still weak. It looks like it's going to be working between this little range now, between 638 and 649. So about 11-point range there. All right, let's take a look. Let's see some of these energy stocks. ExxonMobil, reversal. A little fake breakout over 93s, back below 93 at 92.15. CBSX obviously came out and guided lower last week. They got hit. All right, and now as long as we hold below this little resistance channel that we broke down out of, which I have to fix on the chart later on tonight, you can see here if we hold below 15.5 here, that'll be an official back test of that little prior range, which is now acting as support. Prior support now acting as resistance if we do not get back above, say, 116 or so. All right, that's about it, guys. We'll have plenty more stuff to go over. Come check us out Sunday night at 9:30. All right. Hope you guys are having a great weekend. Hope you guys enjoyed the video. And I'll catch you guys later. Catch you guys tomorrow night. Have a great night. Thank you.